Alrighty, what's up, guys? It is Thursday, the 13th of October. The market closed up about 25 minutes ago. And we'll do a quick recap here of a wild, nasty, crazy-ass session. So, of course, we got the CPI report this morning, which initially led to a flush into a brand new low. So you had the S&Ps giving 34.91 a little smooch. Then we got one hell of a short squeeze to the tune of about 200 points, all the way up here towards 36.80. Pretty crazy stuff, guys. Check it out here on a 15. To see the nastiness, we gapped down and like 30 minutes later, just vertical takeoff. So now, of course, the biggest question is that the bottom? And can the market actually trade higher from here? I don't think that's the important question. I think the important question is, did anything change today? Because we've seen this movie before. And the key takeaway from today, it's a prime example of why you can't get short when everyone else is getting short. It's a prime example of the importance of shorting the rally. Because this morning you get that big flush. We're taking out a key level of support. It's kind of a crowded, obvious move. Now, sometimes that move's going to work. A lot of times there's the potential for finding yourself in a bit of a trap. Good example of that today. But bigger picture here, guys, that's kind of the important question. Did anything change? Because we've seen this movie before, and frankly, in a bear market, you're going to see some pretty chaotic, pretty spastic rallies. So, those are the two questions. Did anything change as far as the bigger picture? And then on the lower time frames, are there any improvements here that point towards, maybe this move can last a little bit longer? So we'll take a look at both ends here, guys. Now, as far as bigger picture, let's look at our pieces of the puzzle first. So the volatility index continues to trade above that daily 21 EMA with buy signals on the daily, the 4-hour, and the 2-hour. So, of course, if the volatility index pulls back a little bit, typically you get a decent bounce in the market. But as far as the bigger picture structure, the VIX is still incredibly bullish, so long as you're above that 21 EMA, spitting out a couple of buy signals. So that doesn't change today. Moving on to HYG. And again, if HYG pops, you tend to get a pop in your market, very much like back here. But as far as the bigger picture structure, we're still under that falling 21 EMA with sell signals on the daily, 4-hour, 2-hour, and the 1-hour. So bigger picture, that does not change. And then last but not least here, the dollar. And of course, if the dollar pulls back a little bit, you can get a pretty good pop in the market. Bigger picture structure, however, remains pretty bullish. And frankly, guys, I think the moving average to anchor to on the dollar is actually the daily 50. Because clearly a move under the daily 21 doesn't quite stop it in its tracks. So bigger picture, as far as the pieces of the puzzle, not too many changes. The dollar is above the 21 with buy signals. So is the volatility index, and your junk bonds still falling under that 21 EMA. Now, as far as the market goes, 200-point rally aside, nothing changes here as far as the bigger picture structure. So the key is whether or not things change on the lower time frames. But of course, the monthly squeeze rather, that doesn't change today. So we still find ourselves under a ever so slightly falling monthly 21 with a negative histogram. And like I mentioned in yesterday's video, this is the last line in the sand. You take out the monthly 50, it is a wrap for the market. But obviously that structure doesn't change today. Moving over to the weekly chart, and that doesn't change today either. Still under your falling weekly 21, with a squeeze that just as of Monday begins to fire short. So no changes on the monthly, no changes on the weekly. Not that we would expect any changes after a one-day pop. But more importantly, in the short term, we haven't changed anything about the daily structure. We're still under that falling daily 21 EMA, pumping out some sell signals. So, that is the question. Does this turn into another rally into the 21 and then we puke it up and fall apart again? The pressure from the bigger time frames would suggest a pretty good chance it's actually going to be the outcome. Or does this turn to a bigger rally? Could we rally all the way back towards I don't know, sake of conversation, the 50 SMA. What that's going to require is the lower time frames getting into an uptrend. So before we jump into that, guys, quick recap here. Bigger picture doesn't change. So a good perspective is you look at the inverse chart of the S&P minus SPX. On the inverse chart, we got a bit of an uptrend going. So the question would be, does today's candle cancel out the structure of that uptrend? Like, does that put a knife in the quality of your uptrend? I'd have to say no. The uptrend gets killed if they take it well under that daily 21 EMA. So no changes, bigger picture. Now real quick here, the Kings of the Hill, the former Kings of the Hill, huge rip here for Apple today. You had a low of 134, and you closed at 143, but not too much changes. Still under that falling daily 21. So we're still short Apple. We got to stop up there around 155. Amazon still under 125. Interestingly enough, granted it bounced, Amazon finishes today slightly red. What's going on here, Amazon? But the structure is still bearish. And then you got the almighty Tesla. You came down, you smooshed your lows, you bounced a little bit, but the structure is still pretty shot here under 265. So the S&Ps, the HYG, the dollar, the VIX, your Teslas, your Amazons, your XLKs, the semiconductors, bigger picture, nothing changes today, guys. So now the question is tomorrow, early next week, can we start to get the 5-minute, 15-minute, the 30-minute, can we get these lower time frames into an uptrend? If we can get them into an uptrend, then we can potentially trade a little bit higher here in the short term. So how can we define bullish trend? We're looking for price action above the two key moving averages, 21 EMA and the 50 SMA. We're going to look for a positive cross of those moving averages, so the 21 EMA above the 50 SMA. And then, of course, the bonus is, do we ever get any big three buy signals? So what progress did the bulls make here today? Did they get the hourly chart of the SPX into an uptrend? And the answer is no. Now you're back above your 21, you're back above your 50, but no buy signals, no positive cross. Alright, what about the 30-minute chart? A little bit more progress here. You are back above the moving averages. You've got a positive cross. Now here's the thing. We haven't gotten the first test. Now, you get the big short squeeze, big rally. Always wait for your first dip. Because that's where you learn a lot about the market. If the 30-minute chart is going to go into an uptrend, you'll get a pullback to your 21, you'll find support, then she'll turn the corner and keep pumping higher. So a good example is something like this. Trap the shorts, big old short squeeze. In the process, they rebuild the structure and the trend. The key is whether or not the first dip actually holds support. Did a pretty good job back there. The opposite is something like this. Trap the shorts, big short squeeze. They rebuild the structure. The first back test of the moving average totally craps the bed. So a little bit of progress on the 30. And a little bit of progress on the 15. But you can also see here on the 15-minute chart, we still haven't gotten our first dip. You gotta wait for that dipperoo. Taking it down to the 5-minute. Now that's what trend looks like. Back above the moving averages. Positive moving average cross. So that means our bars go from red to green. And we're actually holding the pull back to the 21. You dip. You rally. You dip. You rally. So on and so on. So there's the progress today. You've got a 5-minute chart behaving like an uptrend. You've got improvements to the structure on the 15 and the 30, but we still haven't seen the dip just yet. We're going to learn a lot from that dip. And my suggestion here, guys, especially given the fact that we're kind of running right towards that falling daily 21, that could continue to be a big level of resistance. So with all that being said, the theme heading into tomorrow is that nothing changes bigger picture on today's rally, which means we're still looking to short the rallies. November, December expiration. That much hasn't changed, but with a little bit of progress to the 5-minute chart, what I think you want to do tomorrow is wait for a dip. Anchor to something like a 15-minute time frame or 30-minute time frame. If the dips actually hold to your 21 EMA, you could look for a bit more upside. Then, of course, you got big resistance at your daily 21 EMA. But that's about it, guys. And nothing to sneeze at, right? And hopefully I'm not coming across as, biased on the market either which way. But think of the two sides of the fight right now. Right? In the blue corner, you've got a sketchy-ass monthly squeeze hanging on for dear life at the last level of support. And for what it's worth, the QQQ is actually, it's hanging on. But the QQQ is actually firing the monthly squeeze short. Right, so in the blue corner, you've got a sketchy-ass monthly squeeze. You've got weekly squeezes firing short, and they're known to pack a punch. You have daily downtrend with a bunch of sell signals, and that's basically across the board. Pretty much in everything except energy. And you still have a bullish dollar, a bullish volatility index, and a bearish HYG. With that focus on the bigger picture, that's why the structure to the lower time frames in the short term is really important. In the left corner, right, in the blue corner, you got all these bigger picture problems on monthly charts, weekly charts, the dollar, etc. And right now, the only thing we have to try to fight against that in the red corner is a little 5-minute uptrend. Haven't seen a back test on the 15, haven't seen a back test on the 30, and we don't have any buy signals. So where I'm going to call BS on this whole rally is if we can't get above that daily 21, and if we can't, at a minimum, get 5-minute and 15-minute buy signals. So the bigger picture remains unchanged. I'm still looking to short the rallies. What I'm looking for tomorrow is any kind of evidence from my 5-minute, 15-minute, 30-minute chart that there might be a bit more gas in the tank here. Otherwise, we could crap it up and it could roll right back over. So tomorrow, for those of you in the mastery, we are continuing to hold the Apple short. And we got our stops up there at 155. So for now, we're sitting comfy. We got a call credit spread on Walmart. It's just kind of choppy at this point. And did we get filled on LNG? LNG looks like a beauty. Yeah, this daily squeeze looks poised for a ripper. Let me see. Did we get filled? No. Alright, guys. We didn't get filled on the LNG trade just yet. 750 open. We're trying to buy this back at 25 cents. Let me see. 50 cents. So with any luck, we get a bit of a gap up tomorrow in LNG. And we take profits into the weekend. And that's kind of the one bullish-looking spot in the market right now, is the energy sector. So the game plan remains: try to buy the dip in names like LNG, names like EOG, and potentially names like ExxonMobil. But there you have it, guys. Another video in the books. Another crazy day for the market in the books. Again, the important lesson from today is when things feel their most bearish, which of course this morning you take out key support, you've got the S&Ps down almost like 3%. Doesn't feel much more bearish than that. But typically that's the point where the old rug pull could be around the corner. And that's why you have to anchor to these bigger picture things. That's what gives you the confidence to short into these rallies. Until proven wrong, shorting into the rally, that's how you lock up the good risk reward. So, as always, guys, if you haven't already, go on ahead and hit the like and subscribe button. If you're interested, check out the link in the description for the 30-day $7 trial to the Mastery Group. And, of course, you got the link in the description for the Big 3 indicator. But that's it for today, guys. Hope you enjoy your night. I've got... I'm running behind on a lot of stuff. I got to get emails. I got to call friends back. Your boy's got a lot on his plate. Such is life in a crazy market. But thank you guys for watching. Hope you found it helpful, and I'm sure we'll talk a couple more times this week. See y'all soon.